All right, great. Thank you so much for joining us. My name is Kaylin Hessel. I am the Advocacy and Outreach Manager for the Oregon Able Savings Plan. And we're going to go over pretty much everything you could want to know about the program today. So let's get started. What exactly is ABLE? So this is a program that's been specifically designed to help people with disabilities save their own money without losing their state and federal benefits. It is an online bank account that lets people save or invest. The only way to get one of these is through the state, since it is a state-run savings program. So you access it online. It lets you save or invest for the future. The program was created under both federal and state law. And then this is something that is run through my department at the Oregon Treasury Savings Network. We basically oversee the big picture, the direction of the program. We give these kind of educational seminars, but then we partner with Someday, which is a division of BNY Mellon, and they handle the day-to-day management of the program. So they're the ones who actually process forms, manage the websites, and keep your money safe. So this program exists for a very important reason. Before it existed, people with disabilities were in a tight spot. If they wanted to get critical benefits that they needed, like Medicaid and SSI, that helped them live independently, they had to choose to basically live in poverty to get those. You're not allowed to have more than $2,000 in your own name and get stuff like Medicaid and SSI. That's not very much money. It was really, really difficult for folks. But thankfully, since Congress passed the law creating our program, people with disabilities are able to save money without it counting against this $2,000 asset or resource limit. So people can now save much more money, still get their SSI, Medicaid, SSDI, Medicare, HUD assistance. It doesn't count on the FAFSA for when you're applying to college. Anything with an asset or resource limit, your ABLE savings won't count against those. My favorite part about the program is that from the very beginning, it was designed to be a self-empowerment tool for people with disabilities. And this comes through in a number of different ways. So first off, the person with the disability is the beneficiary, which in this case means they're the person benefiting from this account. They're also legally the account owner. So everything that is in the account legally belongs to them and is supposed to be used for their benefit. Now, we built out this program using a presumption of competence. We assumed that all of our savers would be able to manage their accounts independently. And we think that it is best when people are able to do that. It's most empowering, which, being able to manage your own money helps get you better self-direction, just quality of life overall. But we know that not all of our savers are going to be able to do that. So we do have a plan B, which I'll tell you about on the next slide. But we think it's really important that we built our program out with this presumption. So another way the empowerment comes through is that you actually get to decide some very important information. So account owners actually decide if you're eligible for an account and if you're using the ABLE account for an eligible expense. So at ABLE, we basically say, here are the rules. We have you check a box saying, to the best of my understanding, I am following these rules. This is important because it makes it so much easier for you to both open and manage the account. For most people, it takes about 10-15 minutes to open an account, which is very different than having to apply for government benefits. And this is part of the reason why. It also means that you don't have to ask our permission in advance to take out money. You don't have to turn in receipts to us. But as you can tell, there is a lot of trust built into the system. When Congress passed the ABLE Act, they changed the US tax code, which means that it is up to the IRS to enforce the rules. So there is a possibility that one day the IRS could ask to see proof that you do have the disability you say you have, to get an idea of how you spent your ABLE savings. So it's a good idea to have copies of those receipts, somewhere safe just in case. The IRS has told us that the likelihood of getting investigated by them is no different than somebody who does not have an ABLE account. So it's one of those things that isn't very likely, because it's very well known that they don't have enough staff or resources. But still, we recommend, following the rules and having everything you need together just in case the IRS asks for it. So who can manage an ABLE account? So a lot of people assume that if they have a rep payee, that they can't manage their own ABLE account. That is not true. You can have a rep payee manage your Social Security funds, and you can manage your own ABLE account. A rep payee only has the authority to manage the funds you're getting from Social Security. They don't have authority to manage all of your funds. But for a lot of people with disabilities, the only funds they really had was coming from Social Security, and that's how that confusion came about. So you can manage your own even if you have a rep payee. If you need help, think about what kind of help you need. Do you need help understanding your options? Do you need help navigating the website? If it's more of that kind of support, we encourage you to think about using supported decision making. But let's say you just really, truly need or want someone to completely manage your finances. If that's the case, you can have what we call an authorized legal representative manage it on your behalf. So there are some people who fall into this category. You have parents of minors, guardians, conservators, or someone with power of attorney. So if there's anyone else in your life, like that rep payee, sibling, spouse, that you would like to have manage your ABLE account, the only way they can do that is if they also fall into one of these categories. So the easiest, least restrictive way to get someone else to manage your account would be to give them power of attorney. I know that is a scary sounding legal word, but I promise it's not that bad. If you go to our website, OregonAbleSavings.com/forms, you just look for the one that says power of attorney. All it does is give permission for someone else to manage your ABLE account. That someone else can be an individual or an organization. And, when life changes and you don't want that person managing your account anymore, you can take back that authority. It's just different paperwork. So that form does end up needing to be signed before a notary, stamped, and then given back to us. But it's usually not too bad of a process for people. All right, so in order to qualify for an ABLE account, there are 2 criteria that you have to meet. First is severity of disability, second is age of onset, and you do have to meet both of these. Severity of disability means that your disability impacts you enough that it meets the disability requirements for SSI or SSDI. If you already receive either one of those, it's clear you meet the requirements. But let's say you don't receive SSI or SSDI because you or your family has too many assets, too much income. That's okay. You can still have the ABLE account as long as whatever condition you have, you think should be qualifying you for either of those programs. The second criteria is age of onset. So this means that your disability started before the age of 26. If you are 80 years old today, you can still have an ABLE account as long as, your disability started before your 26th birthday. Now we know that this means that a lot of people don't qualify for ABLE, and there's an interesting backstory for that. It took a full decade to get the ABLE Act passed through Congress. Originally, there was no age of onset. it would be open to anyone with a disability. And at Oregon Able, Oregon State Treasury, we believe that we should go back to that. We want, everyone with a qualifying condition to be able to benefit from this account. So the ABLE Act passed in 2014. Every year since then, there has been a bill proposed called the ABLE Age Adjustment Act, and that would raise that age of onset up to 46. It's something that we very much support. We're cautiously optimistic about it. It does have bipartisan support, which sounds kind of miraculous these days. So cautiously optimistic, but it's Congress. We can't predict if or when they're going to do anything. So if this applies to you or someone else make sure to check our website or our social media feeds from time to time, because we will definitely be putting that information up there. If you're not sure if you qualify, you want to be extra sure, you can get what we call a disability certification form signed by your doctor. It's essentially a fancy doctor's note. The form just says, explains to your doctor what ABLE is, have them go look at Social Security's criteria, and then ask them to sign off on it. Since you decide if you're eligible for an account, you don't have to give us a copy of this. It's just something that you can keep in your files in case the IRS asks one day. So what exactly can you use this account for? There's about a dozen things listed in the law, and you'll see them on the screen. We've got education, housing, basic living expenses, transportation, employment training and support, assistive technology, personal support services, health prevention and wellness, financial management, legal fees, and funeral and burial costs. But thankfully, when they created this law, they realized that each one of us has a different idea of what's going to give us a meaningful life. And they didn't want to leave out something that'd be important to either one of us. So they included this and more concept. So really, the thing you want to remember is that sentence up top. You can use the ABLE account to pay for anything that improves the health, the independence, or the quality of life of the person with a disability. You can fit a lot of those things into that category, and it is pretty vague, and that's intentional. The people have asked the IRS over the years if they can be, more specific about what counts and what doesn't, and they keep coming back with the answer no. Like, they don't want to do that. Don't make them do that, because this works in everybody's favor. They realize that, what might be an eligible expense for me might not be an eligible expense for you. Let's say someone who experiences blindness wants a book in Braille. Clearly that's going to help with their quality of life. But if it's somebody who, doesn't experience blindness, has no intention of actually learning how to read Braille, it wouldn't make sense for that person to buy that Braille book. So that wouldn't end up qualifying for them when it would totally qualify for someone else. So if you're wondering what counts, just ask yourself, does this improve my health, my independence, or my quality of life? And am I comfortable maybe asking the IRS about this, or telling the IRS about this one day? If the answer is yes, go ahead and use your ABLE account for it. There are some limits you should know about. You can only have one account per person. The most that can go into the account each year is $15,000. That money can come from pretty much anywhere. The most that can be in there overall is $400,000. And then if you are receiving SSI, the most you can have in an ABLE account is $100,000 without SSI getting effective. If you go over that limit, that extra amount starts counting as an asset for the program. So let's say you have $100,005 in your ABLE account. It's just that $5 that'll then count as an asset for SSI. If you end up being over-resourced, your SSI benefits are suspended until the money in the ABLE account dips back below $100,000. But again, this only applies for SSI. If it's SSDI, Medicaid, any other benefit, you can have up to that $400,000 limit. So I mentioned at the beginning that within ABLE, you can choose to save or invest. So these are the options that you have within the account. If you're looking to save, you'll want to look towards our cash option. It's going to be most similar to a checking or savings account. It's FDIC insured, which means that the federal government is guaranteeing that the money you put in there is going to stay in there until you take it out. And it's the only one that is a guarantee. It does have an interest rate that's tied to the federal interest rate. So there's a possibility that your money might grow a little bit, but it usually won't be very much. The other options are investment options. So this is, talking about stock market kind of thing. The names of each of these options match up to the amount of risk in each one. So the conservative option has a conservative or small amount of risk. Moderate option has a medium amount of risk. Aggressive option has a lot of risk. So that means that, there's a larger chance than the other options that you could make a lot of money, but you could also end up losing some of that money. And for all of these investment options, they're made up of a mix of different mutual index funds. And that's what the chart on the bottom is showing. You can dive as deep into that as you want on our website, but really the choices you have are at the top. You can choose cash. You can put all of it in there. You can put all of your funds in one of those investment options, or you can split it between cash and one of the investments. And you're not going to be stuck with those decisions. You can change your mind, mix that up to twice a year. Now is a good time to let you know that I am not a financial advisor, so I can't tell you which of these options is going to be best for your individual situation. But I can encourage you to think about some of the best practices that are out there. Think about what you're using the account for. Are you using it to pay for everyday expenses? Are you saving up for something that you won't end up purchasing for 5, 10, 20 years? And then how comfortable are you with the idea of risk? Is it terrifying to think that you might lose some of those funds? Are you, okay with a little bit? The answers to those questions will help you figure out which of these options is going to be best for your situation. So let's talk about how you can contribute money to this account. So like I said before, money can come from pretty much anywhere. The most common sources that I've heard about are, a person's own paycheck, gifts from friends or family. They have leftover SSI funds at the end of the month, or they get a lot of back pay, an inheritance, a settlement. All of that can go into the ABLE account. But each time you make a deposit, you put money in, you have to do at least $10. You can also set up automatic monthly transfers, which means that if you want to, deposit $50 on the 10th of each month, you tell us to do that, and we will make sure to take out $50 on the 10th of each month. It is important to note that it does take money. It does take 3 to 7 business days to move money, from your checking or savings account into your ABLE account. Someone is asking if funds can come from, SSDI. Yes, any legal source of money that you have can go into the ABLE account. Another way to contribute funds would be through payroll deduction. So if you're working, you can fill out some forms to have your employer put a certain amount of money in your ABLE account each month. And then we also make it easy for friends and family to contribute through our gifting options. The easiest, fastest, coolest option is our online gifting platform. It works kind of like a Kickstarter or GoFundMe. You create your own little web page, and then you can send the link out to family and friends. They can click on the link and directly put money into your ABLE account. It's as easy as it sounds, really handy for any birthdays, milestones, holidays. It's very cool. I wish I had one. But then if, you have some family members who prefer to do things in a more traditional manner, we do have paper forms that they can fill out and mail in along with the check. Now, earlier I said that the most you can put in to the ABLE account is $15,000 a year. If you are working and you are not saving for retirement somewhere else, then you can make what we call an able to work contribution. So this allows you to save an extra $12,760 or the total of your wages, whichever is less. So if you make $30,000 a year, you can save an extra $12,760 through the able to work contributions. If you make $5,000 a year, you can save an extra $5,000. So when you put money into the account, we ask, is this standard contribution or able to work? So we can track those things separately and make sure that we're giving you access to save for as much as you are entitled to. Now, it's important to note that it's only the person with a disability who can make an able to work contribution. If you have family or friends that want to put money in your account, that's great, but that'll have to count as a standard contribution. And I also want to stress that even if you directly deposit your money, your paycheck into the ABLE account, we're never going to be able to help with any income limits that your benefits might have. So benefits tend to have an asset or resource limit or income limit, sometimes both. The asset or resource limit is what says you can't have more than $2,000 in your name. The income limit is what says that you can't make more than a certain amount of money each year, or you can't work more than a certain amount of hours each week. So we can basically help you save more of your paycheck at one time, but unfortunately we can't help you earn more money through your work. All right, so if anybody had been saving in a 529 college savings plan, you are able to roll that money from the 529 into the ABLE account without any penalties. In Oregon, our 529 is the Oregon College Savings Plan, and since my department manages both of those, we don't charge any fees for moving from Oregon College into Oregon ABLE. What gets transferred does count against that $15,000 a year limit. And then the last thing to keep in mind is that the person with a disability needs to be listed as the beneficiary of both the ABLE account and the 529, or a close family member. So let's say a family has 2 kids, oldest goes to college, gets a full ride, doesn't need their college fund. So they're able to roll over the money from that sibling's 529 into the younger sibling's ABLE account. Can still be used to pay for her to go to college, but it can also be used to pay for, an unexpected medical expense that pops up, or it can be used for whatever transportation she needs to get to college. And normally a 529 can't do that. So it gives you more flexibility, which is pretty great. All right, so how do you get money out of this ABLE account? One of the easiest ways is to if you have a checking or savings account, you can connect the two so that you can just log into your ABLE account and ask us to make a online banking transfer from your checking or savings account into your ABLE account. You can also, or from the ABLE account back over to that checking or savings account. You can also ask us to mail a check to you or someone else, but it's $2.50 per check. So it'll be cheaper if you can move it into your checking account and then write the check. Now it does take some time to move funds from the ABLE account over to your checking or savings account. If you're moving money from the cash option, it's about 3 to 5 business days. If you're moving money from one of the investment options, it's closer to 5 to 7 business days, since we have to sell the investment, transfer it into cash, and then send it over to your other bank. An even faster way to get access to your funds is the Oregon Able prepaid card. This is a prepaid card, so it doesn't work at ATMs. So if you want to get actual cash from your account, the best way to do that would be moving money from your Able account into your checking account and then going to the ATM. So what is this prepaid card? If you think of a gift card, it's going to be most similar to that. When you get a gift card, it has a certain amount of money on it, and you can only spend what's on there. So with the Able account, you decide how much to put on there. Let's say I put $50 on my Able account. I can go and spend that $50, basically anywhere that takes Visa. But if I try to spend more than that, I'm cut off. I'm not allowed to spend more than what I already have on there. And you can use this account anywhere online or in person that takes Visa. Every time you swipe it, you do get a record of where you used it. And we think this tool is especially helpful for any teenagers transitioning into adulthood, anyone who goes out with a personal support worker, or anyone who's learning their financial skills. So, for instance, let's say my teenager has one of these cards and I am managing her account. I can put her spending money onto this card and then she can go out and spend it. Let's say I did put that $50 on. When she comes back at the end of the week and asks for more money, I can say, but I just gave you $50. What happened to it? Teenagers, they'll likely be like, I don't know, I don't remember. So we can log into the account and see that she went to Starbucks every single day and spent $10. So that is why she doesn't have money left on her card. That gives us the knowledge that we need to have conversations like, is this really how you want to use your savings? Or do you want to hold on to it longer so you can buy that, new laptop you told me you wanted? From our perspective, either of those choices is good. We love our coffee as well. We just want to give you the information that you need to make the decisions that help you get towards your goals. Another handy feature about the card is that you can set extra limits with it. Normally limits, don't sound very good, but I promise this time they're actually pretty cool. So let's say I recognize that every time I go to Target, I spend more money than I intend to because I'm a human being and Target knows how to get money out of my wallet. I can tell my card, listen, I just can't trust myself at Target, so don't let me spend more than $100 there at once. And if I tried to spend more than $100, it wouldn't let me. It would help prevent me from spending more than I wanted to before walking into the store. So you can set up limits like that. You can say, don't spend more than a certain amount of money each day. You can say, don't let me use it, at Amazon ever or at Target ever. If the card is only supposed to be used to go to the grocery store, you can limit it so it only works at grocery stores. There's a lot of options. All of that is up to you. We're not forcing you to use any of those. We just wanted to make sure that the card was as flexible as possible to meet as many people's needs as we could. Now, we recognize that not all of our savers are going to be spending money on a regular basis. So we decided to only charge a fee for the people who would be using the card instead of wrapping it up into our overall fees. So there is an additional fee of $1.25 a month, and that's whether or not you actively use the card. So if you swipe the card 100 times a month, it's $1.25. If you swipe it 0 times a month, it is $1.25. So we recommend only signing up for one of these cards if you think you're going to spend money on a regular basis. So what are the other fees you should know about? There is a $35 annual flat fee. So that means every 3 months we take out $8.75 for a total of $35 a year. There is also an annual asset-based fee between 0.3 to 0.35%. So this is less than 1%, which is very competitive for the other ABLE programs and for investment products like this. But we do know that these fees can still be hard for some of our savers. So know that we're only taking what we need to keep the program running. One of the benefits of this being a government program is that we're not here to make a profit. We are truly here to serve you. So we're doing what we can to lower those fees as quickly as we can, but for now, that is what they are. There's another chart at the bottom of the screen that talks about some other fees. These are ones that, only come up from time to time. Usually if something abnormal happens, like you need us to mail you something overnight, there's a fee for that. So the only one I want to point out is the paper statement delivery fee. We really encourage everyone to manage their accounts online so that it keeps our costs down so we can keep your costs down. But if you want us to mail you those paper statements, we can do it. It is just cost an additional $10 a year. All right, so there are also tax benefits for having one of these accounts. When you put money into the ABLE account, there's the possibility that your money could grow. All of that growth is free from both state and federal taxes, as long as you're using it for one of those qualified expenses. So something that improves the health, independence, or quality of life of the person with a disability. Now, putting money into the ABLE account can also qualify some people for the Savers Credit. This is a tax credit that was originally designed to encourage low and moderate income workers to save for retirement, but they changed it recently to allow some ABLE contributions to fit for that. So you can have up to $2,000 of your ABLE contributions qualify for this credit. And if you want to know more about, who qualifies, you're going to want to go to the IRS's website and look up the Savers Credit, and they'll let you know. It's really based off of what your income is. We also have an Oregon state income tax credit. So anyone who contributes money to this account can get a refundable tax credit up to $150 for single filers, $300 for joint or married filers. So this means that you can get up to $150 or $300 back when you file your taxes. Since it's a refundable tax credit, even if you don't owe the government any taxes when you file your taxes, you get back this money. So it is a progressive tax credit. That means that it's going to have more of an impact for our low to moderate income savers. So if you look at that chart, if you make less than $30,000 a year, for every dollar you put into the account, you will get $1 back on your taxes, up to $150 for those single filers. Then as you move up that income scale, it becomes every $2 you put into the ABLE account, you get $1 back on your taxes. So when you file your taxes, the beginning of each year, if you use, TurboTax or H&R Block or something like that, there'll be a point where they ask you, have you contributed to an Oregon ABLE or Oregon College Savings Plan? How much? You let them know. And then they'll just do this math for you. So it's also good to note that anyone who contributes to this account can take this tax credit. So if 5 different people contribute to the account, 5 different people can take that tax credit. So someone is asking, if you don't file a tax return, this would not be applicable, correct? This is more geared toward those who are working and filing taxes. So yes, it's for people who are filing taxes. And one of the things that I have noticed over the years is that there are some lower income folks who don't file taxes because they know they won't owe anything. So let's say, you are working and maybe it's only a couple hours a week. It's not very much. You're not going to work enough that you would owe the government taxes. It's still worth considering filing a tax return because then we can give you, up to $150 back. So I encourage you to think about that. And there are these organizations called VITA tax sites. They'll help you file your taxes for free, figure out, what you qualify for. That is VITA. So you can Google that and get some more information. Now, let's say you decide you want one of these accounts. How do you get one? You are going to want to go to OregonAbleSavings.com. That is the only way to get an Oregon Able account. You have to get them through the state. No banks or credit unions offer them, so you can't just walk into your local one and get one. If someone else is managing your account, they're going to have to give us copies of the documents that prove that they have the authority to do so that they're power of attorney or guardian or conservative. We also strongly recommend attaching a checking or savings account at your local bank or credit union so that you can make those online transfers from one to the other. When you open the account, you have to put in at least $25. That's it. This next slide is a good one to take a snapshot of because it walks you through those steps. Step 1, you get some information together. You're going to need social security number or tax ID number. We're going to need your banking information. Then you go to OregonAbleSavings.com. Click Open an Account in the upper right-hand corner. Then you'll fill out the forms, connect your bank account, put in at least $25, then you're done. Most people, it takes 10-15 minutes, but there are 2 exceptions. If someone else is managing the account, like I said, they have to give us documents proving they're allowed to do that. And it takes a couple extra business days since someone on our end has to look them over, make sure they're real legal documents. The other exception is what happens during what they call the Know Your Customer process. So legally, all banks need to know who they're doing business with, which means that they have to verify our identities and make sure that we are who we say we are. So there's a section that asks questions tailored just for you. It'll be stuff like, which of these companies have you worked for? Which of these counties have you lived in? What they're doing is pulling information from a database, and it's got stuff like your credit history, your rental history, your employment history. But we know that for a lot of young adults and people with disabilities, they don't have much of those histories. So what ends up happening is they can't get through that process. They get an error message. It says call our call center. I know that freaks out some people, but don't give up. You can still have the ABLE account. If it sounds like this is going to be something that you or your loved one runs into, think about filling out the paper version of the enrollment form. If you go to OregonAbleSavings.com/forms, you look for the one that says enrollment, fill it out, and then you send it in with a copy of like a photo ID. So then we will verify your identity through a different process. And once we've done that, you'll be able to manage your account online, just like everyone else. Okay, so now I've got time for questions. If you have any, please write them into the Q&A or the chat. So we did have one come in earlier. So someone is wondering if they can get a copy of this recording so that they can watch it again. Yes, that is my goal. So We are going to be putting it on our YouTube channel and our website so that people who can attend today can still get the information. It does take a little while to do that, so give me a day or two and then go to OregonAbleSavings.com and look for the resources tab, and you'll be able to see it listed there. So I will stick around for a couple more minutes to see if any questions come through. Otherwise, this is my contact information. Please feel free to reach out anytime with questions, concerns, comments, suggestions. We really want to make this plan the best it can be for all of you. And we know you have a lot of great ideas, so please share them with us. My email address is kaylin.hessel@ost.state.or.us. All right, so I'll stick around for 2 more minutes, and then I will end this unless I get some questions. Thank you all very much for hanging out with me this afternoon.